The US saw headline CPI inflation drop to a two-year low of 3% in June, while core CPI receded to 4.8%. Against this backdrop, the US Federal Reserve will meet on July 25-26 to mull rate hike decision after a pause in the prior month. As per a Reuters poll, the Fed is likely to lift the benchmark overnight interest rate by 25 basis points to 5.25 to 5.5% range, with most economists betting on this rate hike to be the last increase of the current tightening cycle. The focus, therefore, would be on Fed's guidance for the remainder of the year and whether it would hike rates all the way up to 5.75% as suggested in the June meeting.
I would be very surprised if the Fed goes in for two rate hikes subsequently from here onwards. It will essentially mean that the real interest rates in US will go into a massively positive trajectory. We do expect the inflation footprint, CPI overall, to kind of climb down a little bit more in the US in the coming months and come back into the Fed zone, tolerance zone of about 2%, and thereby essentially meaning that the rate cut cycle from here onwards is not very far away.
Cumulatively, the Fed's 500 basis points rate increase since March 2022 has been higher than any previous rate hike cycles. Economists, however, fear that inflation might not come down easily from here on as easy base effects are behind. A Reuters poll suggested that none of inflation gauges, be it CPI or core CPI, were expected to reach 2% Fed target until 2025. That said, if inflation does not continue its reverse trend, analysts predict more rate hikes could be on the anvil.
Currently, market is priced in for the one additional rate hike this year. But the second rate hike is also possible as inflation remains above the targeted limit. Hence, the tone of Fed chairman remains critical at this juncture. Well, market will keenly watch the FOMC chairman's view on economy and the inflation, and based on that, the trajectory of dot plots are very important. Post-July meeting, the market talks will likely to shift towards the timeline of first rate cut. So, based on these developments, any deviation in the current expectation will lead to the short-term volatility in the market.
Overall, markets are confident that the Fed's July meeting could produce a rate hike, but the question pertains to what comes next. Today on July 24, markets will react to June quarter results of Reliance Industries and ICICI Bank. Besides global cues, foreign flows and crude oil prices will continue to guide market movements.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.